past week, Tesla stock surged along with the rest of the markets collectively. Let's go ahead and take a look at the chart. Friday, Tesla closed a little bit under 214, up over 3%, getting as high as 217, but pulling back about an hour before the closing bell. Over that past week, Tesla stock is up almost 7%. Over the past month, over 30%. Over the 3-month period, up nearly 10%. When going back a year, however, Tesla stock is down 12%. And just because I like looking at the 5-year chart, Tesla stock over the past 5 years up 990%. Long term, Tesla stock is going to continue to climb higher, but just like you see on the graph, there will be moments of extreme up and there will be moments where the market is quite bearish. Looking at the 5-year chart, it seems like up is in its immediate future. It's hard to imagine the support levels dropping out below those January 6th levels, but stranger things have occurred. For the week, I've got my eye on the Tesla 215 put. This thing will expire at the end of the week. I got a break-even point of 209.25 by then. Should Tesla begin to test supports of 205 next week, I'll probably end up taking profits there. Depending on how Tesla reacts over the next couple of days, I'll be testing puts for the next 2 weeks and then turning extremely bullish when Tesla is about a month out from their Q2 earnings. Those with access to all of my options activity know that I have some very long calls, so if Tesla stock does soar, I'm not too terribly concerned. But for the week, I have a pullback, not just with Tesla, but in the general market. We will see. If you're looking for access to my options tracker and my Tesla shares tracker, click the link in the description. Not only will you gain access to that, you'll gain access to exclusive content like my FSD driving videos and much more. We're going to do a little last week today type situation, a roundup of all the key news that happened last week in the EV space. Let's get right to it. Tesla soars 10% amid Musk China visit. Lucid slumps on stock sale. Ford, Uber's win-win partnership, and more. Biggest EV stories of the week. Key points: a cash crunch could be biting Lucid Group, and China's NIO, XPeng, and Li Auto reported their delivery numbers for May this week. Electric vehicle stocks closed the week ending May 19th on a mixed note, with market leader Tesla having strong run amid techno king Elon Musk's first China visit since the COVID-19 pandemic. Here are the key events that happened in the EV space during the week. Musk reserves high praise for the China team and Model 3 gets tax incentives. Musk's China visit took center stage this week as the billionaire visited Tesla's Giga Shanghai plant and met with Chinese government officials, including the foreign minister and the Ministry of Industry and Information Technology. He also held discussions with the Shanghai Party Secretary and had an audience with China's Vice Premier, who is reportedly close to President Xi Jinping. On the corporate side, Musk met with the world's biggest EV battery maker, the chairman from CATL. At the Giga Shanghai plant, Musk addressed factory workers and other employees. He expressed his appreciation for the incredibly impressive way they overcame difficulties and challenges. He also lauded the made-in-China cars as one of the highest in quality. As the capacity in Shanghai grows, manufacturing batteries, expansion of Giga Shanghai that will no doubt include the next-gen vehicles. As Tesla's main export hub, it is no mystery why Elon loves the Shanghai plant. China is very important to the future plans of Tesla, and will continue to be so well into the future. But as Giga Texas and Giga Berlin continue to ramp up to their potential, that heavy lifting that the Shanghai plant is doing will be evenly distributed amongst all of the Gigafactories. In another positive development, all 3 trims of the Model 3 vehicles sold in the US are eligible for the full $7,500 tax credit allowed under the 2022 Inflation Reduction Act. This is huge news, not just for the tax credit, that's fine, but this is an extremely bullish signal for Tesla's capability to use locally sourced battery materials here in the US to achieve that full tax credit. Only the performance model was eligible for the full credit, while the Model 3 rear-wheel drive and the Model 3 long range were eligible for only $3,500 of the tax credit. With the change, the rear-wheel drive base model is now priced at $30,000, becoming the cheapest Tesla car. Are you kidding me? We're talking about with these incentives, some areas of the United States, the Tesla Model 3 is worth $30,000. As soon as the macroeconomic pressures alleviate and more families can find a way to make that monthly payment, the demand for a $30,000 Model 3 will be insane. And as you know, Tesla stock crossed the $200 psychological level and posted a weekly gain over 10%. As you've seen earlier in the video, I have a put. I believe the market will take a pullback. Tesla will suffer because of it, but I could be totally wrong. If Tesla stock soars back to the 220s, 225s, we might be in uncharted territory, folks, and see a relative explosion. I plan to have a short term bullish sentiment in about 2 weeks or so as we approach second quarter earnings. I will be watching the market quite eagerly this week. Let's go ahead and see what the other players are doing. Lucid's twin offerings, a cash crunch, could be biting Lucid as the Newark, California based startup announced a common stock offering of 173.55 million shares. Additionally, the company said its majority shareholder and an affiliate of the Public Investment Fund to buy 265.69 million shares of its common stock for an aggregate purchase price of about 1.8 billion. The combined proceeds from the common stock offering and the private placement are expected to be about $3 billion. The share dilution sent the stock lower as it closed down over 16% for the week. In my mind, Lucid is about where Tesla was in 2012. The difference between Tesla and Lucid right now is that next generation car that is significantly more cost effective and has a greater total addressable market. They're realizing that production of these vehicles is not as easy as Tesla makes it look. Ford strikes deal with Uber. The legacy automaker announced a partnership with ride-hailing company Uber, a win-win relationship for both companies. Under the agreement, Ford will lease its Mustang Mach-E EVs to Uber drivers under flexible terms. The partnership program will initially be rolled out in San Diego, Los Angeles, and San Francisco. For Uber, the program will help the company conform to government regulations that require it to have more EVs in its fleets. This is the second major partnership Ford announced in as many weeks. In late May, it announced a partnership with Tesla that will allow Ford customers to use the latter's superchargers. Rivian may lose its NASDAQ 100 spot. Rivian stock is trading way off its post-IPO highs and is at risk of losing its spot in the NASDAQ 100, an index comprising of 100 of the biggest non-financial technology stocks, according to Bank of America securities analyst Min Moon. The stock now has a measly weight of less than 0.1% in the index. Yowza! Analysts expect the stock to be booted out of the index by the third Friday of June, as the exchange typically removes the smallest members from the index after being the low for 2 consecutive months. This will not be good for Rivian stock. These startups had the deck stacked against them. IPOs based around Tesla's evaluation at the time, quite ludicrous. There's no way to know that these companies would survive the transition from prototype to full production. And in some respects, we're still not there. They're nowhere near profitability. My magic number is 500,000 pure battery electric vehicles a year. Once you've hit that benchmark, everything else will become considerably easier than before. Still difficult. Chinese EV trios mixed show in May. NIO, XPeng, and Li Auto reported their delivery numbers for May this week. Li Auto stood out with both year-over-year and month-over-month increases. Its May tally was 28,277 units compared to 6,155 units for NIO and 7,506 units for XPeng. NIO's delivery growth marked a 12.4% year-over-year decline and a 7.6% quarter-over-quarter drop. XPeng's deliveries were down about 26% from a year ago, but 6% higher than the previous month. It's hard to gauge these manufacturers on their number as China is going through the ringer when it comes to their economy. I'm not too terribly concerned about any of these auto manufacturers. The faster they're able to get into other markets, whether that be Europe or North America, then you'll see more of a stability with these numbers. But let it be known, this is what you would consider Tesla's competition, but even still, they're laps behind Tesla. Warren Buffett-backed BYD sold 240,220 new energy vehicles in May, with battery EV sales at 119,603 units, up 124% year over year. BYD is scary. Chinese automakers are Tesla's perceived competition, yet they're still laps back. But they're progressing at a rate that is reminiscent of what Tesla looked like back in the day. I've yet to see that from any of the US automakers. My big question is, what will Tesla stock do here by June 9th? Do you think it'll go up? Or do you think it'll go down? Leave your comments down below. Let me know what you think Tesla stock will do this week. Well, that's all I got for you. Be easy. Peace.